Hello all, thank you for joining today. We're just giving some of our attendees another minute to get in and get settled, and we will start up in a minute at most. Thank you. Hello all, thank you for joining today. This SOFTRAX webinar titled Operationalizing ASC 606, One Company Story. We appreciate the time you're giving us, and we look forward to presenting the material today. Let's get started. Talk about the agenda for today. So we're going to just do a quick intro of SOFTRAX as a company, and then our client Tyler Technologies as a company, with and then quickly following that, some impressions on the real world impacts of ASC 606, based on our daily experiences with companies as they navigate that challenging set of requirements. And then I think what will really be the centerpiece for today's discussion is the story of ASC 606 operationalization at Tyler Technologies. And to that point, I think it really tells a great story of a real world application of how a company took 606 and took full advantage of it to really operationalize. From a housekeeping standpoint, this is a CPE eligible webinar, so for those of you that have done that before, and anyone new, really the requirements for that, getting that 1.0 CPE credit is you attend for 50 minutes and you answer the 4 polling questions that we put forward. And so throughout the presentation, we'll be presenting those polling questions for your responses. I think at any point during this presentation, using your GoToWebinar console, it should be on the right side of your screen, you can submit a question in the question box. And I think, if time permits at the end, we certainly will answer questions. If time is short for whatever reason, we will follow up with you within a business day at the most with our responses and in writing, and then if need be, we can certainly do a call or whatever forum is best to communicate with you, we will do that. Let's talk about who you're listening to today. So I'll start with myself. So my name is Graham Hume. I'm a Vice President of Product Management here at SOFTRAX. And so in my role, I handle all aspects of the product planning and execution for basically all of the products and services that we offer. And so our mission as a company is to provide best-in-class, purpose-built software and services to address really, complex revenue recognition, billing, subscription, and renewals management challenges that companies face. Of particular focus for us is ensuring that our software and services bring maximum value to companies that have to work through the landscape of ASC 606. And then prior to SOFTRAX, I held leadership positions in product management and in customer services roles at financial software companies dealing with products that are ERP, cost accounting, obviously billing and rev rec, all the way through budgeting and forecasting software. So have a good swath of experiences there. I'd also like to introduce Steve Kovac, and he was the implementation team lead. He is the implementation team lead at Tyler Technologies. Started in June 2017 through September 2019. Obviously, that's where we are today. And Steve brings over 30 years of experience as a financial and operational professional to, really to the equation here. I think Steve's played roles in a range of publicly traded and private equity-backed companies. He had a long stint as CFO at AT&T Wireless, where he implemented Sarbanes-Oxley procedures, negotiated and closed a number of M&A transactions and an IPO. And most recently, and I won't speak for Steve, but probably it was one of the more challenging experiences. He led Tyler Technologies through an adoption, a full retrospective adoption of ASC 606, and we'll talk about that in detail today. Steve has also been working with our parent company, which is AFS Technologies, in their adoption of ASC 606. So really, Steve has a holistic view across the board via his work with different companies on 606, as well as that background that we just talked about. In terms of SOFTRAX, just a quick background here. We're a division of AFS Technologies, as I mentioned. Our focus in the past and now has been to deal with the most complex revenue recognition issues that companies face. And so we pioneered the automation of complex revenue recognition solutions. In addition, we also offer solutions to address complex billing and renewals management challenges that companies face. And as you can see, we have hundreds of deployments. We're on our 4th generation of our architecture to handle these complex revenue challenges. Our primary office is in Boston, Massachusetts, but we have offices spread, as you can see, throughout the U.S. and globally. So we do have a sizable footprint in terms of our team. Now, in terms of, I think what's important, and we really like to stress this as we're engaged with companies, is if you look on the left, you'll see, and Steve can speak to this, but our solution, we aim to address the challenges across industries. And you can see as you look at the logos on the screen, that it indicates as such. The goal on our end is that we're working very hard to package up solutions that companies can consume, either at, whether you're operating at annual revenues in the billions, or if you're an emerging or mid-sized company and you're growing and you need those challenges that you need to address. We're packaging our solutions so that we can scale up with you. We can start at the top with you, wherever you may be, but the industries we serve they run the gamut, and it's how our solutions are tailored. We try to really make sure that we can handle complex issues across the spectrum of challenges that companies face. So, it's a procedural thing. Before we dive into a little bit more content, I am going to publish our first polling question. So I'm launching it now. And so you should see the first polling question, which is, which of the following best describes your company's status to meet the requirements of 606? And you have 4 answers. I'll give everyone a few seconds to answer, and then I'll share the results with all of you. Obviously, we've got 4 answers: not started, in implementation, and then we have the first phase, or fully complete. All right, I'm going to close this and share. So, I mean, based on the results, Steve, any thoughts with what you're looking at here in terms of surprises, thoughts, concerns on your end?
Yeah, I think I'm just surprised that with adoption fully complete, minimal issues to address. As I speak later, in about 8 months, we were done at Tyler, but it was there for 2.5 years. So that one surprises me, but we can move on.
Okay. All right. So I think from a perspective of impressions on the impact of 606, one of the key things that we wanted to impart, and I think it will be illustrated with some empirical evidence from Steve's testimony in a few minutes, is, the number of workarounds appears to have increased over the past few years. And I think what we work with companies every day, And when we do that, we want to understand the totality of the challenges they face beyond just, is it just 606? Is it something else? And so using all of those data points, one conclusion that we came to is that, and we're seeing it frequently, is that workarounds are becoming the norm versus, automating or operationalizing. And we've seen three themes that have played into that. I think the first theme that we come across frequently is that as companies move forward in the subscription economy, both in terms of how they have to sell product and recognize, sell it, bill it, and recognize revenue for it, those have introduced unique challenges at each step of that, let's call it, chain. And that has really introduced a level of complexity in the back office, because companies don't want to be held back because they can't bill or recognize revenue if they have to change the way they sell to be competitive. But there's a push and pull there between being able to accurately handle those type of scenarios in the back office. I think the advent, which many of us, if not all of us on the webinar today know, we had the back-to-back standards, ASC 606, also known as the new RevRec standard, and then 842, which is the leasing standard. Those came back to back, and I think Steve will speak to this shortly, but those hit companies hard in terms of the level of effort, to adopt, and then just to get to the point of adopting, they didn't necessarily have time to automate ahead of adoption. So a lot of it went to spreadsheets or adding headcount or what have you. So I think that obviously led to a number of workarounds in terms of the proliferation of those manual processes. And then I think the other piece that we've seen is companies, the way they consume the products and services they use to run their business in terms of finance and accounting teams, back office teams, they've gone to cloud products, which is a clear win, but it introduces challenges that hadn't been faced in the past using those types of applications and systems, because the ability to customize to meet unique needs of your business is constrained, because in a cloud world, it's in many respects a one-size-fits-all, unless that product has a high degree of configurability, which we found is still something that has to be developed by many vendors in that regard. So from our vantage point, we've seen these themes as the major ones that have led to an increase effectively in the amount of workarounds and manual efforts that come into play. I think adding to that, and really segueing nicely into Tyler's case study, is Tyler started at that point, but they took a very, organized and I would say thorough path to move from a point where there was high complexity with high manual workarounds, headcount, what have you, to one where as the complexity rose or increased, they were able to bring down the level of, headcount, manual workarounds, et cetera, and operationalize. And they did so in the context of a full retrospective adoption of 606. And so in that context, I think it's important, this is what makes the story that Steve's going to tell important, because it really gives a vision into, all right, this can be done, and we can do it at a company of the size of Tyler. And so with that, I think, I want to turn it over to Steve so he can give you, a snapshot of Tyler and then talk you through that story. Steve, away we go.
Okay, well, yeah, hello everybody, and thank you for devoting an hour of your time today to hear this story. Just a quick clarification on my introduction there. I was a CFO for AT&T Wireless for the Southwest U.S., about 75 markets, and the Sarbanes-Oxley work was done at another public company, and the IPO at another company, and M&A really kind of in all of them. So it kind of all sounded like I did everything there at AT&T Wireless, and wanted to correct that. So hopefully you've seen this slide, and really in summary, Tyler at about $1 billion in revenues. It's the standard in local and state government software, and so that includes the court systems, schools, first responders, Even property tax appraisals and bills that you get, don't be mad at them, are often Tyler software. And then the base ERP system that would be used by the city, county, or state. Most of the contracts exceed $1 million, and some of the installations can go as long as 5 years. And I'm sure there are a few that are longer.
I think, Steve, I think one question that I have is, with that, nearly $1 billion in revenues, how large was this project in terms of time and transactions when, in terms of scope?
Well, just a couple of weeks ago, we finished what I would call 2 full phases of 606, and it took 2.5 years. First, there was the conversion. We processed over 1 million performance obligations from prior years through the revenue automation software. That took from about June of 17 to April of 18. We started the project in June of 17. We did a full retrospective restatement, and we had to reprocess contracts really from 2009 to 2015 through Revenue Manager, just to get a beginning balance to begin our restatement. And then we did all of 2016 as one period, and then we did 2017 by quarter, and the first quarter of 18 was done to finally meet the SEC reporting deadlines that were due in May. The phase 2 part of it really was mostly composed of interfacing with the existing systems and automating, really the subject of this. Costs were in the $1 million range. The task was monumental. Hardest thing I've ever done in my career, but it was very rewarding. And that, I'm hoping, will be the flavor that I hope you take with you today. And ASC 606 in a nutshell is to accommodate a new set of financial requirements. It is, it says one of, I think it's the largest, most complex accounting change since accounting standards were invented. And that was the year 1494, by the way. It's still to this day evolving because it was released with a significant number of unanswered questions. Yet companies are blazing ahead with new systems and change management and new sets of internal controls, while everything really hasn't leveled out. And on public companies, the SEC comment letters are still kind of rolling in. Last year, E&Y did a survey of actual companies that were implementing. And what you see here is that about 4 out of 5 companies have had to use manual workarounds, or will have to begin using them, and mostly performed on spreadsheets. And these manual workarounds have resulted in additional personnel costs, increased audit risks, limit scalability, and worst of all, accounting can become or has become a bottleneck in the organization because of this. This one here, the majority of both public and private companies have seen their costs go up, not down. Anyone who's read the entire 606 literature, FASB projected that this was going to simplify and decrease these things. So they've seen them go up, not down. So that makes 606 conversions really opportunities instead of problems. And if you look at it in this way, and I'll explain here as we go on. Most folks, again, are finding just the whole thing difficult. You really have to minimize these manual processes to reduce your risk, the audit, and your financial statement presentation. And the PCAOB meanwhile is increasing audit requirements, just making the whole thing a grind. So this next slide, for today, I really want you to remember, a third of the respondents answered that this change is an opportunity for transforming the organization. I personally believe that at least another third could agree with this question, but they look at this accounting change as a grueling project to grind through and be done with, and not really knowing or thinking about how they could use it to make their organization a better one. So 606 really is a catalyst. Things could be worse. One of our former assistant attorney generals, deputy attorney general, coined an appropriate phrase sometime, and that's if you think this is expensive, try not complying. So things will be worse if you don't do this right.
I think it's time for our second polling question here. And so let me bring that up for us. I'm going to launch it. Make sure you're all seeing it. Yes, there we go. So, if your company is planning to automate its revenue recognition processes under 606, what time frame will it do so? I think where this question comes from is we see a lot of people who, at least when we talk to them, they've adopted, they think they're done, Steve, and then at the point in time, they have to go and try and meet the requirements month to month, quarter to quarter, or go through their first annual filing. They find that those manual processes or, hands-on work, it becomes, becomes onerous, becomes a heavy burden. So that was the genesis there. Let me share the results here. Let's see, so we've got 16% 1 to 3 months, 4 to 6 months, and then 39% already automated or no plan to automate. So we've got a pretty healthy swap there in the first 4 that look like automation is at least an idea or a consideration. Any thoughts on that, Steve?
Well, yeah, congratulations, first of all, to the folks out there that appear to be on the other side of this challenging thing. And, I'm assuming that the rest of you, what we've seen as we've traveled around, is that a lot of people got through this thing with spreadsheets and workarounds and intended to comply with those tools, and are finding that tracking deferred accounts and doing contract modifications and all the crazy other stuff that is in that standard is making those things more and more difficult. Their hair's on fire, and probably guys are looking for a better way to do things.
Agreed. I think we're going to hide this. There we go. All right.
Oops, wrong direction.
There you go.
So I was sitting next to the CAO one day as he was trying to put this down on paper. And it looks like it ended up an easy slide, but it wasn't. And kind of what it says is, if you take your existing processes pre-606 and you add more manual processes and workarounds in order to comply with 606, you have more controls to perform and monitor things. You end up with then FTE requirement for more manager efforts, a bit of an increased lag time for information, and increased audit costs and financial statement risk. This may not have been true with you. It was with us. But at the bottom there, the low knowledge in the FP&A team. So at Tyler, the financial planning and analysis teams are local at the divisions, reporting up to division presidents. They had a lot of time, had a tough time transitioning to 606 because it changed their forecasts dramatically. I had trouble with their forecasting, and that turns into reduced decision support. And I think that reduced decision support are probably the worst words on this page. I remember a large benchmarking firm called the Hackett Group once reported a survey of Fortune 500 companies and said that the average company spent 80% of their finance dollars on transaction processing and 20% on decision support. And that being really kind of the top part of the page there being transaction processing, and then decision support being kind of the bottom part. But when they surveyed what they considered world-class companies, the metrics were reduced, and they were spending 80% on decision support. So if you see your decision support is declining as a result of the things you're doing, it should be a huge red flag. But it's also something you can use as a weapon to drive the transformation that you want to drive in your organization. Yeah, I spoke earlier about complexity. We've used that word a few times. If you compare Tyler's 7 different revenue types, and then you throw in material rights and contract modifications, significant financing components, other contract performance obligations that the FASB decided would get unique treatment, we were feeling like they used Tyler to design the standard. We turned out to be the Baskin and Robbins 31 flavors of ASC 606 complexity. And there would have been no possible way, even with an army of people, that we would have met those SEC deadlines without an automated revenue system. We of course chose SOFTRAX, but the main point is that all spreadsheets in the world would have meant failure for us. We could not have done it.
I think, Steve, to that point, I think one thing that's come up when we've talked to companies is the impacts on areas outside of just finance and accounting, specifically like areas such as sales. I think in terms of what about the salespeople at Tyler, what changes did you have to make to the processes in terms of, so that sales felt, did they feel it was limiting their ability to sell? And if it did, how did that get handled so that you could, accomplish the goals of 606, but not inhibit the sales team in any way?
Oh, that's a great question. I think the CIO at Tyler and I both agree on what we call a golden rule, is that you don't ever want to tell sales that they need to change some successful selling method in order to accommodate accounting requirements or the system. You just don't do it. You got to find another way. I'll hesitate there and say, unless of course you got to keep folks out of jail. How sometimes sales can push the limits, but those fences are usually not there as a result of accounting rules. So we were always conscious that we did not want to impact the sales folks.
Yeah, I think that aligns up with what we've experienced. I think the biggest thing is trying to, and it's an interesting term, answer the me question, so to speak. And the me, obviously, on the sales side equals the we, because obviously sales drives growth, et cetera. And that's really what we've heard is until that buy-in occurs, you know, 606 can't be truly adopted if it's just within accounting and finance. It's got to go across the entire org. And so it sounds like that was the experience of Tyler as well.
Yep.
All right.
So, our old environment, now, first of all, I'll tell you that we weren't calculating revenue on all of our performance obligations or elements really under 605 in spreadsheets, but there was a good part of the process that was. We would have our contracts come in and looked at by a revenue department that would essentially do a manual allocation of the revenue, and they had to reference price books that were maintained in Excel to get the VSOE that they needed to do that. We had to enter, sales would enter contracts in one system, and then they had to be transferred to order entry and re-input, and then support had to re-enter them. And I won't go into why, but just trust me, it had kind of a triple entry thing going on. We had a myriad of homegrown and third-party time capturing systems. So, and that was mainly due to the decentralization of the divisions. One division was using their own deal, another one was using another product that they had gotten off the market, and another division might be using a different one. We had, I would say a lot of manual journal entries. Now, don't get me wrong, we weren't a pegboard system, all right? That's not what I mean here. Many of the workarounds in disparate systems, you know, the results that came out of them needed to be massaged. And the output of those adjustments ended up manifesting themselves as manual JEs into the general ledger, in addition to those that were automated and came from clean subledgers. And another thing is, you know, we had manual maintenance renewal processes, and we had tons of controls on these manual processes. You know, public company, and being scrutinized on a quarterly basis by, you know, full-time auditors there. And there really was no collective contracts database for forecasts and disclosures. So there was no way to go in and mine data without, when we really needed something, we put somebody on a week-long project to get the information. By the time you got it back, you no longer needed it. And then if you did use it, you ended up looking backwards instead of forwards. Also, the onboarding of accounting staff was tough. That's here on the next slide. There we go. Imagine hiring a staff level accountant, many of them with accounting degrees, to come into the order revenue, order management group, and you had to sit there and train them on all of the exceptions that you had. So here's the way to do it, but if you see this, you do that, or if you see this, you do that. That's what it was like. And so it was really tough when somebody left that really knew all of those exceptions, and then you had to replace them. Very, very difficult. The producing backlog reports took 2 days. Rolling forward the backlog and deferred revenue often resulted in discovering missing arrangements that had not made their way to the accounting group, and calculating and substantiating for our auditors VSOE and then later SSP, you know, was a labor-intensive manual process. It's worth saying that now, I'll show you more about the current state, that the new automated system, the revenue subledger tracks backlog, the contract asset and liability balances, deferred balances for each single performance obligation. And that can be rolled up into order groups, or it can be rolled up and finally to the contract group. And many folks under spreadsheets are really having the most issues because of the balance sheet accounts, really not the revenue accounts, in continuing to use manual processes for their 606 compliance.
Good stuff, Steve. I'm going to fire up our third polling question here. Bear with me for a moment. It is, if your company has not automated its revenue recognition processes for 606, why has it not done so to date? And I think this ties into some questions we're getting. I can see some questions coming into our question box here. I'm going to give another 10, 15 seconds. For those of you that asked the question about reminding before we close the poll, I had a quick close finger on the last one, and my apologies. I'll make sure this one we have ample warning. Another 5 seconds or so. Okay. I'm going to close it. I'm going to share it. So we can see here, I mean, I think, you know, we have the 50%, it's not required or another reason, and then the remaining, and then it's spread out amongst the other reasons, Steve. I think the first two, in our mind, are what we heard most often. It's interesting because a lot of the literature we read indicates that, you know, the leasing standard took people off of 606, but it's not what we hear when we talk to people. You know, when you've been out and about in the field, you know, any thoughts on these answers and the relationship between what you're seeing here and what you've heard talking to people?
Well, it's usually a time and resource issue. I'm not surprised. I kind of combine the first two, and you know, I'll talk about that when it comes to the team. But I feel your pain.
Yeah. If anything today, we're going to sympathize. So, all right. I think, and I'm jumping ahead a little bit here, but one thing I will say is a question came up, Steve, and I think it's relevant to this particular point. It is, you know, are there still companies that haven't adopted yet? Meaning, we had a question earlier in the presentation, and the question was, you know, haven't most companies adopted? And that's a valid question because the effective dates have taken hold, et cetera. I can speak from our standpoint, talking to companies. So privates, some haven't, for depending upon their fiscal year, et cetera. And then I would argue, and you know, obviously not giving away any information about the names of the companies, I will say that we've talked to publics where they might have quote unquote adopted, but they're nowhere near the point that they know they need to be so that they can readily address, be it SEC comment letters, if they're public, obviously, you know, board level questions about preparedness and execution, and then beyond that, you know, auditors questions. So it's a very good question that a couple people put forward in our question box about, you know, shouldn't people have already adopted? Absolutely. The practical realities and some of these polling questions aim to kind of target is people, they were behind, and even if they have adopted, it's really been patchwork. And so, Steve, I don't know if there's anything you want to add to that, but that's really been our experience.
Well, if they're a public company and they haven't adopted, they're going to be in trouble at some point, unless they're, you know, they can only fly under the radar so long. A private company technically, you know, could go through 19. Their audit isn't until the first quarter of 2020. You know, in December or in January, decide to take all of their data and convert it to 606 in time for the audit. I mean, that's possible. And a small enough company, you know, could do that. And they just might not have the resources and money to have started it on January 1st. If there are some companies that are going to try that and they're going to significantly underestimate the time that it's going to take to get it done, and then they're going to be in trouble, and then it's going to cost them a lot more. So,
absolutely.
So kind of what was the overall approach? I mean, first of all, you know, and look, I did this for many years where you're running around like a whack-a-mole, throwing band-aids or bodies at problems. And we tried to, every solution impacting solution that we agreed upon, we wanted to make sure it would scale. We kind of had these priorities that you're reading as we made decisions. And if those decisions didn't hit one or more of these, then we really had to seriously as a team talk about whether that was a nice to have or whether it was crucial. I would just say to the group that putting these things down on paper as they are on this slide is key component of success. And it'll also help you prioritize new initiatives that pop up. Oh my gosh, almost every other day at Tyler, something else came up that we hadn't thought about. And it was called a new initiative. And so we had to prioritize that, and having this down on paper helped us do that. So you guys can, while I'm talking, you can read this list, but really the point here is I was a CFO and a COO for 30 years in both public and private companies. And my success really, particularly as a CFO, is often dependent upon convincing decision makers, be it the board, owners, investors, the CEO, my peers, division presidents, that our investment in new tools and systems was smart and had a good payback. That's not an easy exercise unless you have a lot of experience doing it. And often I'm sure you've gone into your boss and said, you know, we really should do this, but you haven't laid the case out in such a way on paper that somebody can't say no. So ASC 606, believe me, already has their attention in many organizations. So design your needs into a cohesive overall plan and then present it. Since you already have to go through the pre and during and post tedious effort related to this change, you know, why not shoot a little bit higher? And some people can be heroes doing things like that. Our implementation team, we had a 100% dedicated project manager. That project manager lived and breathed this thing. It was a temporary headcount and was somebody from the outside that had a fresh set of eyes, which was one of their criteria, because if you're immersed in the legacy systems, sometimes you just can't see the forest from the trees and you miss a lot of stuff. That happened to be me. We had internal IT resources to assist. We had accounting representation. We had FP&A representation from the divisions. We had somebody with tremendous accounting disclosure expertise. And other divisional representation in some of the other systems that would attach or interface with this main process flow.
I think, Steve, one thing that strikes me here, there are a lot of people involved, obviously, in the project. Were they full-time, part-time, consulting resources? How does the staffing lay out on the implementation team?
Yeah, that's a great question, and probably number one, don't pick internal teammates that are already at 100% capacity. It's really important. The focus and time required for this success, it's going to be well beyond your projections. It's like that room you carved out a Saturday to paint a room, and Saturday came, you started painting the room, and the following Friday you finally finished it. These types of projects are going to be like that, especially this one. And at a minimum, get commitments that they can spend at least half of their time on the project, or risk mistakes or missed deadlines, burnout, and possibly failure. And back to the project manager, they've got to live and breathe the project. He or she may have to be pushy at times and prioritize things differently, but as long as you have somebody that the team will respect, they don't have to like them, and they may get testy at times. As long as there's a respect for that person and their knowledge, you'll be in good shape. So moving on, this says initial revenue cycle, but this is really this is the initial revenue cycle that existed when we were done. Tried to do an old flow chart, and it was make your head explode trying to do it. And it almost couldn't be done, and it probably wouldn't be valuable. So one thing we did was there was no previous interface between CRM and order entry. So CRM would fax or email an order over to order entry, who would then have to translate that and enter it into the system. And from there, things would flow. I mentioned before we had to manually allocate SSP and VSOE before the contract was entered. Now that's automatic. The RevRec takes place automatically. It looks at the SSP in a table that's been set up by product, and it just happens almost immediately. And then we have to capture hours. That's our input method for services, and those hours and the number of hours versus the estimate to complete are fed automatically into the RevRec tool. The fulfillment, whether something has been delivered or not, is fed automatically into it, and that's all fed into the software RevRec, so it knows exactly how to RevRec. And then the RevRec becomes a subsidiary ledger that automatically feeds journal entries to the general ledger and the ERP system, and then to the financial statements. The whole thing here has been designed to be scalable. Tyler has been growing in double digits every single year, and my expectation is that they'll continue to grow. And at some point in that process, you have to lay in a system that you don't have to change again in a couple of years. On this next page is just another flow chart. We have a lot of renewals. Let me get that up. Okay, there we go. So we have renewals for software licenses for the SaaS products, and SOFTRAX also has a separate module that handles renewals, and those are go through the same process. automatic interface to ERP. And then the disclosures have gotten much easier because there's a whole bunch of new requirements under the standard backlog and contract assets and contract liabilities, and the RevRec software computes all of those. We don't have to do any kind of manual roll forwards. And also the SOFTRAX database, or the revenue database, becomes a database in which the FP&A folks can access daily and write their own queries and do their forecasts and trends off of it literally on a daily basis.
Good stuff, Steve. I'm going to present our final polling question here, and that is, if your company, let me launch it, might help, there we go. If your company is not planning to automate its revenue recognition processes for 606, what is the primary reason? So I think, taking a look here, we're getting quick responses on this one compared to some others. So I think we've got a couple here. I think I'm going to give it another couple seconds. Looks like we have a healthy amount that's voted so far. And 5 more seconds. I'm going to close it. Let's share here. So it looks like, you know, there were other reasons, but then we have obviously a higher number across the board. I think, you know, you can see, Steve, looks like we have 8% says the business model or financials are not impacted. It's got, you know, cost responses in terms of cost being too high compared to the benefits, or the costs and the risks of the spreadsheets weren't high enough, I think. And then some just weren't aware of a solution. Any takes on this, Steve?
Well, I mean, the first two, I expect a good percentage of companies are small enough, or, I mean, a pure SaaS company, for example, really doesn't have a difference in their revenue, but, you know, the commission piece changes. But, you know, for the most part, if they're small, I could understand that. I'd expect a certain percentage of that. The one where the solution is too high, you may be right. I would challenge some of the people that think it's too high to really dig in and look at what the real costs are of not doing it. And, you know, I certainly have been in companies where I knew what those costs were, but you had to have an initial cash outlay in order to do it, and you might not have that. I'd love to have a list of the other reasons just for my own knowledge. So I can't really comment on that one.
All right. I'm going to hide that. We'll get back to the presentation, and let's jump to the next one. What are the goals accomplished? Well,
yeah, absolutely. I wouldn't be here today. We you know, I kind of discussed some of this where, you know, the input of new contracts right from CRM is dumped right into the system, and how we automatically allocate SSP with the tool. The reporting for disclosures is there. We have one set of processes. The FP&A having their real-time access. So on the next slide, we have a smoother and quicker close, and you can read these. Just a couple of anecdotes. The close went from 15 days to 6 after adding all of the complexity of this doggone standard. And as most SEC companies do, we got a dreaded SEC comment letter, and it was like if you get an IRS letter and you look at the envelope and you go, "Uh-oh," is the first thing, and then you open it and find out it's nothing. And that's really what it was. There was just a few comments, and it took us just a few hours to draft the thing, send it in, and we haven't heard from the SEC ever since. I'd highly recommend that you disclose everything when in doubt, and everybody's sleep is greatly improved now. And the CAO over there is one that is sleeping much better than anyone else. And so one thing on this next slide here, kind of just to close this thing, is I didn't mean to fool you, but my work at Tyler was done, and as of a week ago, I like SOFTRAX and their revenue tool so much I joined the company. And so as of today, actually as of last Monday, I'm a VP over there. I hope that I have an opportunity to meet some of you out there and help you through your stuff. I'm already having a lot of fun. I love the people and the culture. And it'd be a pleasure sometime to meet you. And thank you guys for listening to our story.
Absolutely, Steve, thank you. I think we've got, looks like 3 minutes. So we have a healthy amount of questions. So healthy number rather of questions. So I'm working quickly to pick those, but for any of those questions that we don't get to before we conclude in a few minutes, we will be following up with you. And this slide deck will be available in a download format in the follow-up email that we send. I think the question that lends itself to answering within the window of time we have left, Steve, and it came up a number of times, or a few times rather, in the list, is was Tyler able to automate a lot of processes by implementing the revenue solution? And if so, were there any manual processes that remained even after doing so?
Well, gosh, the way I would answer the first part of that question is the standard was the catalyst, was the firepower to go in and get various tools to automate, whereas there were requests in past years to do that and to get some uniform processing. And because of 606, all of a sudden decision makers were saying yes. Of course, all of that was in the middle of it all was the conversion to 606. In the middle of conversion to 606 was the revenue management tool. So I can't say that the revenue management tool, caused a lot of automation in the rest of the the rest of the processes, but it certainly was flexible enough, to allow us to do that.
Thank you. Thank you, Steve. I think we're up against the clock here, so I'll conclude with, you can see we have our contact information. We will reach out directly to those that attended this webinar that had questions, as I mentioned. We also have some upcoming events. As you'll see here, we're presenting at 2 conferences in October, as you see here. One's in New Orleans, the other's in Los Angeles. And then in November, we'll be a sponsor at a conference in Boston. We also have a webinar coming up in November, on the 21st of November, The Future of Finance, A Practical Path to Continuous Accounting. And so you'll be able to, in the download that we'll give you, if you click into it, you'll be able to take a look at that and register if you want ahead of time. So we've got a good number of activities lined up. But for today, we greatly appreciate the time that all of you spent. And we look forward to following up with those that have questions. And we really, if you think of anything after this webinar, or if you think of anything at all, Steve or I, we can certainly help at any time, so feel free to reach out. Now, on behalf of Steve, thank you for your time today, and have a great rest of the day. Goodbye, everyone.